Good evening, everyone, and thank you all for joining in. On behalf of HDFC Securities, I welcome you all for this session on weekly FNO market trend based on open interest. Firstly, let me introduce myself. My name is Tarang Solani, and I am the product manager for derivatives. And along with me, we have Mr. Devarsh Vakil, who is our deputy research head, who will brief us about the weekly FNO outlook on the market based upon the weekly open interest. So before starting, we'll just brief you about the flow for today as usual. First, we will give you some brief demo about some of the important features which is quite useful for the FNO traders, which is there in our online trading platform and on our website, which is called as margin calculator, how to use margin calculator and what are its benefits. And then Mr. Devarsh Vakil will give us and brief us about the outlook on the market, when tomorrow is the weekly expiry, and market has been quite volatile, and it is quite showing some kind of a whipsaw movement in either direction. So this outlook on the market will help us to take a view on the market for the next week and also for tomorrow's expiry. And then we'll open this forum for questions session. So without any wasting any time, we'll just start with this session. So as I told, we'll give you a brief demo first about our margin calculator, which is quite useful for our FNO traders. Why it is useful? Because to take any positions in options or in futures, or if you are doing any kind of an option trading strategy, you first have to understand about various margin required based upon the strategy you do. That helps to basically helps to analyze how much capital is required and how much returns on capital you can expect on the margin, basically how much margin will get blocked. So for that, we have a margin calculator. Where do you find this? So you just have to go to hdfcsecurities.com website. Once you go into the website of our HDFC Securities, under products, under derivatives, the second last option is called as margin calculator. So now there are various strategies which one do trade on the expiry day and also on a daily basis in the FNO. Because as you must be knowing, as you all must be aware, that smarter way to participate in this kind of a market swings is through option trading strategy, rather than going naked on the call options or put option or on futures. But if you do it smartly to handle this kind of an whipsaw movement, so that you can minimize your loss in case your view goes right. Sorry, in case your view goes wrong, you can minimize your loss. And however, if your view goes right, you can capitalize on the gains. So for that, you need to do some kind of an option trading strategies, and how you can use it and how much margin will be required. Let us understand. Now, firstly, suppose I want to buy one lot of suppose Reliance future or ICICI Bank future. Let us take an example for ICICI Bank future. Suppose I want to buy one lot of ICICI Bank future. How much margin will be required? So in this margin calculator, you need to select ICICI Bank, select the expiry date. The lot size will automatically get pop up how many lots you want to buy. So automatically the quantity will change based upon the lot you buy and what is the current market price. It will come here, and you need to add this. And once you add, you need to submit. Once you submit, you will be known to buy one lot of ICICI Bank, and 1 lakh of margin will be required to buy this one lot of ICICI Bank. So now suppose to hedge your position, you also want to buy put option, so that if in case market moves in opposite direction, then you are protected. So in this, there is two benefit. First one, your margin requirement is less because you have a hedging leg into it. And the second one is you are protected on the downside. So now let us check how you can check a margin requirement. So you just have to select option stock. Now suppose I want to buy 820 put option of ICICI Bank of the current expiry. So I'll select ICICI Bank as an underlying. Expiry date I'll select as a put option because I want to hedge. I want to buy 820 put option, and I'll click on buy. So once you click on buy, now just check how much. Firstly, if I just buy one lot of ICICI Bank future, my margin requirement was 1,03,000. But now I simultaneously hedge my position to protect my downside also by 820 put option at 13 rupees 40 paisa. Once I click on submit, sorry, so my margin requirement will reduce to half. Only 51,000 of margin is now required, and you just have to add the premium amount which you are buying for 700 put option, which comes to approximately 9,380. So around 60,000 margin is required to buy one lot of ICICI Bank future, and simultaneously to hedge you are buying 820 put option. So that, as I made you understand, there is a couple of benefits to it. Firstly, your margin requirement will be low if you do this kind of an hedging position, hedging strategy, and simultaneously the second benefit you'll be getting it is your loss will also be capped on the downside. Now, suppose you want to do any kind of a strategy like butterfly strategy in Nifty, and how margin is required. So firstly, we'll check this butterfly strategy. Afterwards, we'll also check if you want to check what would be my PNL at various level, which we call as the payoff graph. So once you click on show graph, that will also give you the PNL that will make you understand that at what level how much profit you will be making it in ICICI Bank if it expires at this level and you hold on to this position. If you're not comfortable with this graph, the table is also available. So in this, you will be able to understand how much loss I will be making at different level if ICICI Bank expires at different price, and you hold on to this position till the expiry. So that option is also available. Now what we'll do, we'll clear this and we'll make one more strategy to make your concept more clear. Suppose if you want to do any kind of a butterfly strategy in Nifty, you want to sell Nifty 17,000 call and put, and simultaneously buy 16,200 call and simultaneously buy 17,200 call and 16,800 put. So how you can do it? So let us check. So option index, click on Nifty, click on expiry. You want to, suppose I want to do for 29 March expiry. I want to sell 17,000 call. So I will select 17,000 as a strike price. So I want to sell 17. So I will click on sell. I will click on add. And again, I want to sell 17,000 put option. So I'll select put option. I'll select 17,000 over here. I want to sell 17,000 put option. Now to safeguard this position, I want to buy 16,800 put and 17,200 call. So I will select 16,800 put over here. I will click on buy. The same expiry. I will click on add. And now I want to also buy 17,200 call option. I want to buy, click on add. Now, if you submit, you will be able to see around this much margin will be required if you do this transaction. 43,000 plus 20,000, the total premium around 63,000 of margin will be required if you want to do this strategy. So now if you see here, there is also a margin benefits which is available to you because you have hedged your position. Since you have because if you just sell the options, your margin requirement will increase significantly. But simultaneously, to safeguard your position, you have also bought the option, and for that, this is called as an hedging benefit. And for that, you receive a margin benefit of 1,44,000. Now, to avail this margin benefit while executing the trade, it is always recommended to first execute the buy leg and then execute the sell leg. Then you will get this margin benefit of 1,44,000 rupees. While executing this trade, you can execute this trade with a margin of 43,000 plus 20, that is around 63,000 rupees. But if you execute this trade by initiating first sell leg and then buy leg, then you will be blocked 1,44,000 plus 63,000. So approximately 2 lakh of margin will be blocked. And after executing all your leg, this 1,44,000 will get released. So you need to be careful while executing this trade. And one more option to execute, you can directly execute from this option only. You can click on sell, you can log in with your credentials. And once you submit, the order window will get open and you can execute from this from here also. So this is how you can calculate a margin calculator. Calculate the strategy margin requirement from this margin calculator. I hope this will be quite useful for you for understanding various margin requirement for various strategy. Now I'll hand over to Mr. Devarsh Vakil for providing us the view on the market since tomorrow being the weekly expiry. So let us understand how we can see the market forward. Over to you, sir.
Okay, thank you, Tarang. Am I audible?
Yes, sir, you're audible. You're audible.
Okay, thank you. So let's straight away jump into our content. So when we analyze Nifty, we see that it has seen about 16% rise in the open interest, and Nifty has gone down by 4% in this 16th March expiry this week. Similarly, for last 4 days, we have seen that about 14% rise in the open interest, and Bank Nifty has gone down by 5%. So there is short build-up in Nifty and Bank Nifty. Where are we seeing the options premium? So we see that the call options have been written at 17,100 and 17,200. Now, if you see today's high, market went up to these levels but could not sustain. The pressure from the sellers was high, and because such a large open interest was there, market corrected back. So option writers do not want market to expire beyond 17,200 for this series. Where is the support? So support comes in around the 16,700 to 16,800, and that's where we've seen the large put writing. So right now, international markets are quite weak, and we see that the global cues affect our market every day. Currently, some European markets are weak, and there are problems in, apart from the US banking system problem, there are some talk about problems in the European banking system also. So that's why we could see markets come down. 16,700 is the key support level for our markets. Let's see what FIs are up to. So we have seen that they have sold about 6,500 crore worth of index futures in last 5 days, and the open interest has gone up by 45,000 contract. So here, if you see from the beginning of the series, earlier they were covering their shorts about 4 or 5 sessions back when Nifty was around 17,800, 900 levels. The US banking problem started, and that from there they have aggressively shorted the index futures. The long to short ratio has come down to very low level of 0.15. That means FIs are aggressively short on the market. So we have come down drastically from 17,800 kind of level in last few days sessions to 16,800 kind of level. Support is there. So if right now, based on international cues, if we go down to that level around 16,700 to 800, after fall of 1,000 point in Nifty in last 4-5 sessions, it is recommended that you cover your shorts. Around that level, we might see some support. If international cues are very bad, and if we were to break this 16,700, 800 band, then we can again initiate new short positions. For longs, 17,200, as I've shown in the chart, that is the crucial hurdle. You need to be bullish only above 17,200 for the longer term bullish positions. Once we cross that hurdle, then only markets will have a momentum on the positive side. So 16,700 kind of support. On the lower side, right now markets are weak. When Nifty comes to those levels, if you have short position, try to cover them, otherwise remain short. And above 17,200, you can create long position. So overall, we see that the call writing is at 17,200 level. FIs are short. Put call ratio for Nifty has come down to 0.67. FIs, the long short ratio is at 0.15, which is the lowest since June 2022. And looking at the put writing around 16,600, 700 and 16,800, that is the level where you need to cover your shorts. If market were to go down below 16,700, then obviously we will create more short positions. Bank Nifty also 40,000 is the key hurdle where maximum open interest is there, maximum amount of calls have been written. Another area where calls have been written is 39,500, and the support for the Bank Nifty comes at 38,500 levels. So looking at the Bank Nifty level, we see that there the put call ratio is even 0.52, and also FIs are short. So put writing has happened around 38,500. we think that at that level Bank Nifty can find support. So once it comes to 38,500, which is around 500 point lower from here, if you are short, you cover your shorts and create long only if Bank Nifty is able to cross 40,000 levels. So for tomorrow's session, 38,500 and 16,700 are two key levels for markets. In expiry, once those levels are achieved, you can, if you are having a put or if you are having a bearish futures position, try to book profits around there. And then for the next series, wait for markets to cross 17,200 or 40,000 level. Once those levels are cleared, then only you create long position. Otherwise, on rallies, you can create short position and keep covering around 38,500 and 16,700 levels. So that would be the trading advice for next week based on open interest. That's all from my side. Now we are open to any questions you may have. Depending upon the screen which you are using, you can press the question button and we'll be happy to answer it. Over to you.
Yeah, thank you, sir. Yeah, thank you, sir. So as sir told, we are now open for a question answer session. So if anyone has any kind of a question, so we'll request you to kindly write all the questions on the right hand side of your screen. There will be a question tab. You can use that tab to ask whatever questions you want so far, which we have covered, and we will be happy to reply you. So there was one question, but the user. So there is one question by Mr. Saurabh. Why can't we open session on HDFC Securities web and app and Pro Terminal simultaneously? So as of now, only one and simultaneously you won't be able to open for all this tab, being it Pro Terminal mobile app or web-based terminal. So this functionality is not available as of now, but we have provided your feedback. We are working on that, and very soon we'll be coming out with this functionality. But as of now, the functionality is not there. So Mr. Vinod is asking, what do you mean by total premium and margin calculator? So basically, Mr. Vinod, the total premium is the basically the options which you are buying it. So for that, the premium will be required to pay. So only for the buying of an option, there is premium required. And the rest all, if you are selling options or if you are buying or selling futures, there will be a margin requirement. So combining margin requirement plus total premium, it will give you the total margin requirement to execute the strategy. So that is exactly the premium requirement. So Mr. Karthikeyan is asking, how do we place the selling strategy of strangles? HDFC Sec, do we take the cues from future prices or spot prices? Sorry, I haven't got your question, Mr. Karthikeyan.
So basically, he's looking for which strikes to use for strangle. I think if I understand his question correctly. So our advice would be to look at the future prices rather than the spot prices.
Okay, sir. Yeah. So I hope you got your answer, Mr. Karthikeyan. Mr. Ajay is asking, can we find the OI data in Pro Terminal? Yes, Mr. Ajay. I'll just give you a brief about how you can do it. I'll just share my screen again. So I'll just share my screen. I'll log into my HDFC Sec Pro Terminal. So here, once you log in, so there are a couple of open interests which you can get in terms of futures and also in terms of options. So I will show you both how you can get this in Pro Terminal. I'll just log in. So once I go to Pro Terminal, here there are two ways to check the open interest. As I told, if you want to check the open interest for futures market, so under markets, you need to go to overview, or you can also go to summary. So once you go into summary here, there will be futures, options, OI gainers, OI losers. You will be able to get that. You can also go to overview. So in this overview, you will be able to get to know and the intraday basis of what kind of in stocks, how much open interest have got added in a particular stock. If you want to check which kind of in stock have seen long build up, short covering, all those things you will be able to get in this tab under markets, under overview. If you also go to heat map, this is all futures open interest which I am talking about. So here you will be able to see on a real-time basis how much open interest have got added in these stocks which are listed in the derivatives market, and what is the price movement. Now same thing, if you want to check from the option side, we have an option chain for that. If you want to check the open interest for the various strike price of the options, so go to the symbol you want to check. I am checking it for Nifty. Go for an option chain. So here in option chain, you will be able to see the OI of a particular strike price, how much OI is there. So on the left hand side, you will be see all the call related detail. On the right hand side, all the put related detail. So what is the OI for the particular strike price and what is the open interest range? Here you can find it in a one single screen of a particular tab of a particular symbol, and also you can check what expiry you want to check for. If you want to check for a monthly expiry like 29th March, that too also you can change it and you can check that. So I hope I have answered your question. So Mr. Sripad is asking many times option chain and candlesticks contradicts. What is deciding factor? So can you just brief us about this question, Devarsh?
Yeah, Tarang, you go ahead. One more question. I'll come back.
Okay. So there is one more question. So Mr. Rajesh is asking, good afternoon. Does this feature is available in InvestRight app? So this feature is only available in the HDFC Securities website. If you open this website in your mobile, if I'm not sure if you are talking about margin calculator feature. So margin calculator feature is available on the website, and also if you want to check it on the mobile, you can just log into hdfcsec.com and then under derivatives you can check margin calculator for that.
Okay. Tarang, the question was many times option change and candlestick contradicts. What is the deciding factor? So usually the price action is more important. So candlesticks, usually you have to take it, because please understand the overall market, the derivative markets are sub part of it, and the price action determined by the candlesticks are takes more priority. So though options are important and they do decide short term movements, but overall we have to look at the price action more than the option chain analysis.
Okay. So one more questions we have is, interest rate hike cycle will continue or we may see some pause here?
So there are a lot of contradictions right now. Many foreign brokerage houses feel that after the collapse of couple of banks, the US Fed will stop raising the interest rates, while some believe that it will be 25 basis points or lower. This will be clarified in next 10 to 15 days. So once we will, after a few days, the inflation data will come out and then it will clarify. So we can wait for 2 weeks before answering such thing.
Okay. So we'll take a last question by Mr. Karthikeyan in association with the previous question which he asked. How we can hedge the strangle strategy? Can you please demo us? If I want to start doing, as I have a portfolio of around 1 crore. So Mr. Karthikeyan, first of all, as you also asked one question, that can you pledge your stocks and can you use that margin in derivatives? Yes, you can do it. So there is a big positive for you. You can use your portfolio as a productive. Basically, you can pledge your shares and against that whatever margin you will be receiving it, you can use that margin to trade in derivatives market without any interest cost. So that is a big advantage. You can make your portfolio productive. And the second thing is how we can hedge this triangle strategy. Can you please demo us? So sir, if I'm not mistaken, by doing butterfly you can hedge this triangle strategy, correct?
Yeah, Tarang, go ahead.
Yeah, so it is basically if you want to hedge this triangle strategy, as we made you understand while showing you the margin calculator. Strangle is basically what you sell one out of the money call and out of the money pull. So here, if you want to hedge that strategy, what you have to do is simultaneously you need to buy out of the money call option and out of the money put option to take the benefit of it. Now we had made you understand about the butterfly strategy. So this is and just an advanced version of butterfly, which is also called as a condor strategy. So what you have to do, suppose you want to do a strangle of Nifty 17,100 call and 6,900 put. So here what you can do is, I'll just give you a small demo of it. So here, suppose you want to sell 17,100 call option of tomorrow's expiry, and simultaneously you want to sell 16,900 put option of tomorrow's expiry. So this is called as the short triangle. So if I'm not mistaken, you're talking about short triangle. So this is a short triangle. Now your risk is unlimited if you sell this, but to hedge this position, what you can do is you can simultaneously buy 16,600 put option to hedge your position. This is just an example. So based upon your risk appetite, you can buy the put option you want. Click on buy and click on add, and simultaneously you can buy 17,300 call option to hedge your position so that your risk is not unlimited. And once you do this, this is an hedging strategy of this triangle. Once you submit, you will get the margin requirement for this strategy. But if you don't do this hedging leg, there will be a margin requirement which will be quite high, and also you will be exposed to higher risk. So I hope I have answered your question regarding the protection or hedging against these triangles.
And apart from reducing the cost, sometimes if markets are range bound, then both the premiums, if you have actually bought it by creating a strangle, those option premium time value are reducing day by day. So sometimes when you have gone long on at the money options, it is better to hedge it via little out of money options to recover some of the cost which you have paid while buying the premium.
So one more question we'll take last. The stock option trading is more risky compared to index trading? Please let us know your viewpoint. So can you just brief us?
So yes, overall I agree that stock options are relatively more volatile, and that means if you are right, you will make a lot of money. If you are wrong, you will lose a lot of money in individual stocks. Individual stocks can move 10 to 15% within a week, and that will result into similarly a large movement into the option premium of stocks. While relatively index is say Nifty is made up of 50 stocks, and the overall volatility will be less, the option premium will be less, and that's why it is unlikely to move higher percentage. And that means if you are wrong, you will lose less money, and if you are right, you will make less money. So overall risk wise, anyway, options are highly leveraged product. So if you are right in a index options, you will make a lot of money ROI on your premium which you have paid. So I agree that relatively compared to stock option, index options are a much better bet. And that's why if you see the markets, almost 98% of the turnover which we see in the NSE derivative markets, the notional value of the option premium is into Nifty and Bank Nifty options. Hardly 1 or 2% premium notional value we see in the stock options. So that is the reason why index options are quite popular.
Okay, so thank you. So we'll just conclude this session. Thank you all for attending this webinar. I hope it was quite useful for understanding the view on the market for the next week and also for the tomorrow's expiry. and hope it is very much useful to trade. So I thank you all for attending this session, and have a nice trading day tomorrow. Thank you.